Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm very happy to be hosting this week's topic, which is titled, The Market Timing Indicator You Shouldn't Ignore. With headlines moving the markets day by day, it's difficult to decipher when bad news is good news for the market or vice versa. We sit on the edge of our seats and wait for numbers such as weekly unemployment claims, GDP, CPI, and all the other data that drives the market. And today is a very good example. The U.S. monthly jobs report today, as I record this, showed U.S. unemployment rate fell to 3.7%, showing signs that the labor market may not be cooling as quickly as many had initially thought, which sent the S&P futures lower. But how does that affect the Fed decision on interest rates? Do they cut rates, raise rates, or leave them where they are, as the Fed chair has said repeatedly, higher for longer? Reminding us again, there is a difference between a pause in rate hikes and a pivot to cutting rates. Then at 10 a.m. Eastern Time, the Consumer Sentiment Report from the University of Michigan survey says that the one-year outlook for inflation has fallen to 3.1% versus 4.5% this past November. And so the market, as we'll see in a moment, has found that as good news, and the market has rallied from being down early, or mixed market early, to actually being up now, which we'll take a look at in a moment. So whether it's the macro view of the overall markets or evaluating your current portfolio, the VectorVest program gives you the power to recognize and analyze the important factors that you must focus on to succeed in any market. Right, so using the market timing indicator I want to talk about today, it's designed to keep you from being overwhelmed by these day-to-day headlines and using the program to keep you focused on really what's important, which is, of course, growing your portfolio, but even more importantly, in my opinion, protecting your portfolio. So let's go ahead and jump in. We're going to talk about market direction, and one of the quotes I often like to use is from the fictional character from the classic movie Wall Street, Gordon Gekko. You all remember, I'm sure. And one of my favorite lines from the movie was, he said, "The most valuable commodity I know of is information." And that line has always stuck with me. And it relates to what our founder and mentor, Dr. Bartolito, said many times and written many times, that the single most important thing to know is whether the market is going up or down. And everything else follows from that. Okay, so here at VectorVest, we talk about market timing, and we say that it is of the utmost importance of being on the right side of the market. So we provide you with these indicators to let you know where the market trends are showing. We do not try and predict where the market is going to go. There are those who say you can't time the market. And we say to them, no, you can't, because you don't understand the process, right? You can't predict where the market's going to go, but you certainly can recognize short, intermediate, and longer term trends in the market. So we use our VectorVest timing indicators to do just that. The first one is the price of the VectorVest composite. The VectorVest composite is an arithmetic indexed average of over 9,000 stocks that we track. Right, the Dow has 30, the S&P has 500, the Qs, the Russell 2000, but the VectorVest composite tracks over 9,000 stocks. So this very broad market view of what's going on in the market. So that's one of our timing indicators, is the price of the composite. We then have relative timing, which is of a stock, right? The direction, magnitude, and dynamics of the movement of that underlying stock. In this case, it refers to the movement of the VectorVest composite. And then finally, we have the buy-sell ratio. It gives us the 9,000 stocks each and every day get that buy-sell or hold rating. And as we see the movement of the buy-sell ratio, it gives us that indication of an overall strength or weakness in the market. And we can see how many stocks are taking advantage of an upward move or getting hurt with a downward move. And it gives us some very important information on how the market moves. Now, what we do is then take an indicator called the MTI, or the market timing indicator. Okay, what we also refer to as our underlying trend of the market. Now, like many of our indicators, it's based on a scale of 0 to 2. Again, tracks the underlying trend of the market. There are important levels to understand, and I'll go into the program and show you that to indicate potential for either overbought or oversold markets. So on that 0 to 2 scale, you're going to hear me talk about an overbought zone for the MTI. On that 0 to 2 scale, when it reaches 1.5 to somewhere up to 1.6, which historically says we believe the market is in an overbought condition, that it's looking for a top. Doesn't mean it's all of a sudden going to crash from there. It could stay up at that level for a while, but we'll talk about some of the things you can do to protect your portfolio there. And then for an oversold level of the markets, we look at the MTI down at 0.60. Again, historically showing a market looking for a bottom, an oversold market looking for a bottom. Again, it doesn't mean once it touches that number that it's suddenly going to skyrocket up from there, right? We still have to wait for the signs that it has reached the bottom. But again, we'll talk more about that. So what I want to do now is jump into the VectorVest program and we'll take a look. It will start on the home page. And as I said, right as I record here, we have green across the board. Again, on a headline, just earlier at the market open, there was red. Here, kind of a mixed market. Now we're in the green based on that consumer sentiment survey. So we'll start here in the color guard. VectorVest believes that market timing is always of the utmost importance. We begin with our market timing gauge. The color guard currently is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. We're one tick into the green on the market timing gauge, which tells me there is one green light down here in the color guard, and it currently resides in the price column. We also have the relative timing indicator and the buy-sell ratio numbers here as they relate, again, to the VectorVest composite. So at VectorVest at a glance, we can see we're tracking 9,133 stocks. Okay, again, we take that arithmetic indexed average and it gives us the VectorVest composite price, which is, as we speak, at 59.40. The relative timing or the trend of that, again, of a stock, or in this case, the composite itself on that 0 to 2 scale, we say is in an uptrend because it's above 1. And then there's the buy-sell ratio. Now, every day we take those 9,100 stocks and we give them a buy, sell, or hold rating in our program based on our proprietary rules for that. And then we take the number of buys divided by the number of sells, and it gives us that ratio. And as I said earlier, a very good indication of the underlying trend of the market. Now, with the buy-sell ratio climbing nicely, it was a couple of months that the buy-sell ratio couldn't find its way above 1, and then the market has been trending higher, and so now we see a buy-sell ratio up today at 1.77. But here's where the MTI comes in, and this is what makes it so powerful, is that we then take price, relative timing, and buy-sell ratio, and there's a formula that combines those indicators and gives us the MTI, or the market timing indicator. And it's what we refer to as the underlying trend. And you can see this trend header here. The second column under that trend header is the MTI. And because it's above 1 on that 0 to 2 scale, we currently have an underlying trend in an up condition. Currently, all of our indicators are in an up condition. But that's what we look, and that to me is really the power, is that it takes those important numbers and rolls them into that one formula. From here, I'm going to go up to the Graphs tab, and let's take a look at a market timing graph. And what I have here is the market timing graph with the MTI, the buy-sell ratio, and relative timing all down below. If you watch the daily color guard report, and if you don't, I strongly urge you to. We'll go through these numbers each and every day and comment on the moves and the importance of where these numbers are. What I want to do right now, as we look at this 1-year graph, just for now, I'm going to take off the buy-sell ratio and the relative timing indicator. And I want to focus on the MTI and talk about how you can use the MTI to help you make better decisions, growing and protecting your portfolio. And really where the MTI is, or where it's been, is I'm looking at it almost as more of a point of protecting your portfolio at this point. We've had a nice run, but let's take a look. So I've got a bunch of different time frames up here. You can see I have market timing graphs here. Instead of scrolling around and doing things like that, I picked a few important clear indicators of how you can use the MTI instead of, listen, I can drag this out and make it a 25-year graph. I can go back a long way, okay, with the MTI. And we can see that on that 0 to 2 scale, it's finding its level at its peak. It's finding its oversold conditions. And then we have this line here, which is right at the 1 level on the 0 to 2 scale. Okay. But I'm going to leave it here for now at a 1-year graph just to illustrate and make it a little clearer for you. So the first thing I'm going to do is go back to peak this year on the MTI, and let's take a look how we could apply this important information. Now, what I want you to do, when I put my date line here, you're going to see the MTI over here on the right, and on that 0 to 2 scale, you can see that on February 2nd of this year, the MTI had peaked at 1.66, right? That's above that 1.6 level that we talked about, right? We call it a zone. I use 1.5 as kind of the flag, right? The red alert that says, okay, keep your eye on the MTI now, because it's above 1.5, and if it continues to rise, I understand that the market is beginning to look for that an overbought condition in the market. Okay, in this case, we had reached at least 1.6, and I can actually impose these lines down below. If I put the horizontal line, I could just put it here. Now we reached, I said, what did I say? 1.66 there was the height. But what we're looking at is 1.6, and then maybe the 1.5 I can add there. So that's the zone, as we call it, to the upside, and then I'll put it down here, down to 0.6 for the oversold condition, again, just so you can get an idea of what we're looking at. Now we come to that date. I'll come back to the date where we had the MTI peak there at 1.66. How do I use this information? Well, I know that the market is searching for a top, right? And it continued to while it was in that zone. As I said, it doesn't mean just because it hits there, it's going to turn around and crash, and the market's going to crash. We were right there for a few days until we peaked there on the 2nd of March. If I realize that the market is looking for a top here, right, because I am concerned with protecting and preserving my net worth, there are several things I can do here. I am not in any way going to suggest that once the MTI gets to 1.6, you should dump all your stocks and go to cash. That's not what I'm insinuating here by any stretch. But there are things you can do, and I'll go to a slide in a moment before we're done and show you how the MTI, how that cycle works, and how you can certain trades you can use to help protect and grow your portfolio. So here's a perfect example. We peaked there. It was a point in time where you should be nervous, right? Because the market is topping out here. Hopefully, using the VectorVest market timing indicators, you had taken advantage of that, and you now have profits or unrealized gains that you need to protect. So you use the MTI to say, okay, what could I do? And as I'll show in a moment, I can sell covered calls. I can buy protective puts, right? I could tighten stops if I choose to. Anything that I collar trade, selling a covered call and using that to buy the protective put. Anything I can do to protect my unrealized gain. So that's one great way to do it. As it turns out here in 2023, it peaked and the market did begin to move down. Now you couple this with our market timing indicators. You could use the DEW, I could use the confirm call, whatever, and in this case, they happen to come the same day. I could use the green light buyer, whatever, system you want to use to manage your portfolio, but understand that we're in an overbought condition here, and it's incumbent upon you to now protect your portfolio. And in this case, it would have been a good time to do just that. We saw the MTI fall all the way down right around here. It bottomed out on March 17th all the way down at 0.57. So we would use that as an oversold condition. For those who are a little more aggressive, for lack of a better word, you may want to use the green light buyer, maybe even the primary wave to get into the markets would have been a great time if you were more aggressive. If not, you'd still want to wait for the MTI to cross above 1. That's how we get the underlying trend up. And we didn't have that in 2023 until somewhere around, in fact, June 6th was when we had the MTI cross back above 1. Okay. And then the cycle just continues. It continued here when it peaked right at this date on the 19th of July. It peaked again at 1.59. Yeah, the composite inched up a bit higher, hitting the high here on the 31st. And then what happened? The MTI showed us that it had peaked, that was in an overbought condition, and began to move down. And again, the cycle remains here. I chose a few dates. Again, instead of just going back 25 years, I created a few graphs here. A lot of people forget 2018. Right? We talk about 2008, we talk about 2020 and the COVID sell-off and the downturn from November of 2021. But a lot of people forget 2018. And, following the MTI, even back then, January, there was a huge sell-off in January. And then again, a sell-off that began in October. Well, actually, it was back here around October, early October, where we saw the MTI cross below 1 and continue to move down. Great times to protect your portfolio. Again, covered calls, protective puts, whatever it might be. Right, just keeping your eye on that MTI is a perfect time to do that. And again, just to show you that over time, it really does work wonderfully. This is the COVID sell-off. If I take off the confirm calls and I drag this just a touch, remember, even our guidance in the VectorVest views leading up to the COVID sell-off here that we saw was warning our subscribers that there were other indicators before we knew what was going to happen. The MTI began to fall. And then finally, our confirm call came. But the guidance in the VectorVest views was telling us to be careful as well. And so too was the MTI. A perfect bottom fishing target with the MTI all the way down at 0.22, the buy-sell ratio. Also on the downside, an oversold condition, 0.20. On the buy-sell ratio is usually an oversold indicator as well. It was all the way down at 0.02. So once we see signs of strength, remember, just because it gets down there doesn't mean it can't stay there. We still need to see signs of strength to the upside, but just another great indicator on when and how to get in the market. I did the same thing for 2021. Now, overall, right up until it peaked in November of 21, it did rise. And the MTI gave us indications when it was time as it crossed back above 1, but it still was a rough ride, right? There were some sustained movements to the downside as well, even though overall the composite moved. And then finally, when it peaked right there, we were at 1.54 on the MTI, and that showed us again that flag for a potentially overbought market. And then we know what happened from there. And then we can wrap it up with 2022 with just, again, a couple of these rallies you could have taken advantage of, but you would have known right at this level, at 168, that it would be time to protect those. So even though the overall trend was down, we did have a nice run to the upside. The MTI would have gotten you into that and helped you protect once it peaked there. The MTI is a very, very important piece of information, I believe, within the VectorVest program. Again, to grow your portfolio, to bottom fish, which is a whole entire presentation in and of itself. The Jockey Club, nobody's better at it than Steve and Jerry and Glenn. They're fantastic at the bottom fishing strategies. From the retirement-minded, more prudent investor view, I'm looking at this as a way to really protect your portfolios. So if I go into our slides here, I'm going to show you, this is an old MTI graph that we use, and it shows down at that low of 0.6, looking at the oversold condition, right up to the overbought condition at 1.6. It's just a quick visual of the type of trades, right? So as you see the MTI rising, you can buy stocks or you could buy ETFs. You can buy calls, sell puts. Covered calls, I believe, as that MTI rises anywhere near the 1.5 to 1.6, if you have an equity portfolio that you're building and growing with a longer term view of it, covered calls are essential here. When you get up to this 1.5, 1.55 area and higher, it's a wonderful trade to be able to do. And then as it begins to turn over, right, there are bearish trades you can do. If you trade options, bear call spreads, you can buy puts, you can short stocks, buy contra ETFs, etc., and just follow that movement of the cycle of the MTI. So it's a very, very important indicator that you really should not ignore. So hopefully that information will help keep your eye on the MTI as you build and manage your portfolio. Thank you all for taking the time, and I look forward to seeing you next time.